Today we're seeing several things sell off pretty aggressively as the dollar makes a little bit of a comeback.
I'm thinking I'm back.
So why is the dollar up today? What are these moves about? And where are the best opportunities in the markets right now? Let's jump in and find out. All right, guys, welcome back to another video. Just a reminder as we get started, if these are helpful to you in any way, shape, or form, do me a quick favor and hit that thumbs up button and subscribe to the channel if you're new. This morning, we see stocks under a little bit of pressure across the board, except for the Dow, which is making a bit of a rebound, but NASDAQ and S&P 500 rolling over here, at least at the time of recording this video. Though, as I keep pointing out in my videos, every time these things are down by the time I start my video, by the time the video gets uploaded, they're already back up. So let's see if they can keep up that win streak today or not. Anyways, the euro is down, the pound is down, and it's because the dollar is lift off this morning here. We'll talk a little bit about that. Gold is giving back some of its gains. We had a big shoot up overnight, and then here, once the New York session has started out, gold, the fun has left the station a little bit. Oil is also coming down, so both of my positions under a little bit of pressure here this morning, gold, oil, and with the dollar rising. Not great for my TLT position, which I'll talk about later in the video as well. So let's go ahead and jump into what the news was here this morning. So we had two kind of market moving events that happened this morning. This morning we had durable goods orders, which came in hotter than expected. And of course, that's giving a little bit of strength to the dollar. At the same time, we also had CB consumer confidence. So consumer confidence kind of came in lighter and they revised the previous number down slightly as well. So when you look at all this, you say, well, okay, so wouldn't this be weaker for the dollar, right? A weaker consumer, weaker for the economy, not great for the dollar. But remember, the durable goods orders also, positively impacting. So a little bit of a mixed reaction there, and I think the market has just kind of settled on dollar drifting higher here this morning. That being said, I would also say that consumer confidence being a little bit light, not great for indices, not necessarily something that would send them crashing lower, as it hasn't really done that this morning. But at the very least, I think consumer confidence and the strength of the consumer is very important for stock earnings, because if you think about it, if the consumer is out there spending, they're going to the shopping centers and buying things online and ordering things off Amazon, a high amount of that activity is going to be good for businesses and their earnings, whereas a slowdown in that area, which is kind of what we saw here today with CB consumer confidence, could offer the opposite analysis. That being said, I wanted to talk a little bit about my idea on the Dow. I've been looking for a pullback and I've been waiting for this 50% retracement, which gives us about a price target of about 39,200. We'll see if we can roll over enough to get down to that level. I'm considering an entry point at that level. Part of the reason for that is if we go over to the top setups page on the Edge Finder, you can see that we're getting a +7 score on US 30, indicating that most of the factors here are leaning bullish when considering all the economic data, when looking at seasonal trends, momentum in the market, retail positioning, the commitment of traders data. We land on a relatively bullish outlook for the US 30 according to this system. I've mentioned that the Edge Finder is a systematic approach to looking at fundamental analysis and the commitment of traders data. It basically strings it all together and helps traders spot opportunities. So I am looking for a potential entry on US 30. I also have my eyes on the DAX, but that one has just been straight shot to the moon. In fact, let me show you the DAX really quick. While it's not a market that we talk about too often on these videos, the German 40 is off to the races, and I am potentially a buyer if we get a pullback or a corrective move. I can't buy up here. I can't justify doing that. I wait for pullbacks in my entry style. So from a technical perspective, I'd like an entry, but from a fundamental perspective, I think this thing can keep going. It's been really on fire here recently. While we're on this page, other notable things here are the gold market, the NASDAQ, the US 30, DAX, USO, Euro Pound, not Euro Aussie. So these are your current bullish readings on the Edge Finder. And if we flip it around, here are some of your bearish readings, mostly pound pairs, by the way. Still getting some weakness here on the Edge Finder. Same thing with Kiwi Yen, pound Kiwi, and noticeably everything related to the UK right now is getting a bearish reading except for UK 100, which is close, but not quite there. We're at a -4. If it gets to -5, that is what the Edge Finder considers bearish territory. So keep an eye on that one. Also, I should mention that we currently have a giveaway going on for the Edge Finder. We're giving giving away one free copy to somebody this week just by entering the giveaway, which is totally free to join. I'm gonna show you how to do that. So if you're inside of our Telegram channel, all you have to do to enter the giveaway is just shoot a message to Emily. She's one of my team members here at A1 Trading. Just send her the word giveaway and we'll get you into the giveaway for a chance to win. Again, it's free to join. Just send her a message. And if you're in our free Discord, you can also join it there by sending a message to Drew. He's another one of our support reps here. Just send him the word giveaway. If you're inside of the Discord channel, you go to the new members section, find this message at 10:42 a.m. and boom, you can join the giveaway. Again, free to join. Good luck. Hope you win one. So a lot of people have been asking, Nick, is the dollar bullish? Nick, is the dollar bearish? And I have to explain this concept here because it's a bit confusing at first, and I've reiterated it a few times, but I want to just break this down a little bit. The reason that the dollar is looking pretty aggressively bullish right now in the short term is because other central banks are racing to cut rates, it seems like. We recently saw a move happen from the Swiss National Bank, who already cut their interest rates. They made the move. And with this move, what it signaled to other central banks is, hey, maybe the Bank of England may want to cut rates, and maybe the Bank of Canada, and maybe the ECB, right? So you have all these central banks who have now seen, hey, the Swiss National Bank cut rates, and maybe we don't have to wait for the Fed to cut rates before we can. Well, there's a lot of talk from especially like the ECB and the Bank of Canada, that interest rate cuts may be very, very soon. And if that happens, suddenly, remember, rate cuts are generally bearish for the currency, right? But remember, when currencies are priced, they are priced against one another. So if these central banks start cutting before the Federal Reserve, what suddenly happens is that the US dollar, yes, they're still going to cut rates, but it looks relatively strong because other central banks are cutting more aggressively. I hope that makes sense, but it's kind of one of those things. Sorry about that. My watch decided to chime in. It's one of those things, if all the central banks are battling to cut rates soonest, it's one of those questions. It's not the best of the best. It's kind of who's the best of the worst scenario. If everybody has to cut rates, everybody has to, cool off. Remember, higher interest rates are more attractive for a currency. So if a currency is going to stay with higher interest rates for longer, it might be more attractive relative to its peers. That being said, I'm not some, super bullish outlook on the dollar. However, I do think that right now it does seem like that's the narrative. It seems like in the short term, we could see the dollar head up to retest this area around 104.8. Where things could potentially get interesting would be as if you actually saw a breakout of that level. Like, for example, if other interest rates started coming down dramatically, other central banks, they started cutting their interest rates dramatically, and the Fed was still kind of hesitant, then you might have a case for some dollar bullishness that really could last. But we'll see how that plays out. Right now, it's a little bit messy and hard for me to really decipher a strongly bullish or bearish signal on the dollar, especially when the edge finder's not giving me like a resounding, bunch of dollar setups or a bunch of dollar, bullish or bearish setups, right? It's very neutral across the board. So for me, and my system is telling me stay neutral, I'm just going to stay neutral. Here's a look at current retail positioning. Of course, we use retail positioning as a potentially contrarian signal. So when retail traders are very heavily long on an asset or very heavily short on an asset, we typically tend to look for the opposite side of the trade. Not always, but often enough that it's worth mentioning. So for example, part of the reason that I'm willing to potentially buy pullbacks on indices is because retail traders are very short on the indices. And things like, the Kiwi dollar, the Australian dollar, oil, which is not great because I am long oil already. This is a stab in the side for my position because retail traders are very long oil. That being said, when we talk about the retail positioning, somebody might say, well then Nick, why are you long oil? Well, this is one piece of information. Combining it with everything else, and we still have a bullish read on oil, right? So my point was showing you that and showing these detailed pages is that, the edge finder tries to wrap up many indicators together, not just one. So I think that is one of the reasons it's ahead of the rest in terms of products. Check this out. This is another page that is almost done. We are working on this behind the scenes. It's a new page that allows you to better comprehend all of the data that the Edge Finder is showcasing. So for example, I've mentioned recently that I'm looking for a possible pullback on US 30. This is the Dow Jones. Now looking at this page, you can actually go through yourself if you would like to and better understand the economic figures that are behind the scoring mechanism. So if you're somebody who's, kind of geeky about this stuff like I am, you could potentially go through this page. We'll have one for FX at some point. We'll have one for commodities and crypto, etc. But right now we have the indices page done. So you can go on here and understand, well, hey, the scoring for unemployment rate, why is it, -1? And you can actually go through the data and understand. You can also, if you have the Edge Finder, just go to this help button if you'd like to read through the scoring algorithm notes that we have on our website. And here's an update on my oil position. You guys know I went long here a couple days back. My first entry was a loss of $900. My second entry is currently floating. Let's check the P&L here. Currently floating about $2,400, and my gold position is doing all right. However, both of these have given back some of their profits here on the day. I'll show you, we've seen a little bit of a pullback there on oil, though, I like to see this wick. We'll see how this candle closes today. I would love to see this thing put in a higher low. That would be great for my position. If we take a look at the gold side of things, we're up 0.5%, but at one point we were up like a full percent on the day. Here's the daily chart. Again, we're testing this area around 2180, 2185. Let's call it. I would be very, very happy to see if we can close above this level today. That would be really bullish, I would say, for oil. Gold, and could perhaps suggest that we have higher prices to come. Again, 2200 seems to be a big psychological level of resistance right now. We came up and tested it just very briefly here in the early morning session here. Looking at like London time, we tested that 2200, came back. I'd be curious to see if we can close above this key area of resistance for potentially a continued squeeze higher. But I am still bullish on gold, continue to hold on to my two positions. Next up, I'm going to do something a little different. I'm actually opening up the WeBull platform to show you guys my options trades. And if you don't care about this stuff, then you could get out! But if you're curious, stick around, I'll show you this. WeBull is the platform that I use to trade options. I am I have two different major strategies that I use. A momentum strategy, which you guys see me trading like gold and oil right now. And then I have an option selling strategy where I'm essentially collecting premium and building positions and so on and so forth. It's more of a mean reversion style trading. Anyways, TLT is a 20-year plus treasury bond ETF. It is a very liquid, heavily traded ETF that tracks, again, kind of bond prices. Anyways, I have sold two different puts. One is about to expire worthless, which is great because I sold the put. So I shorted puts, which essentially says somebody else wanted to buy bets that the market would go down. I said, sure, I'll sell that to you. And in return, I collected a premium. In fact, I'll show you that premium here right now. So I collected on this one just about $500 in premium, which again, you can see I'm almost floating 100% of the max profit here just by selling that put. And it was a put that I sold out of the money. So not bad. I also just opened up a new position. So if I go back to this chart, I just sold a put for April 26th. On this one, I will actually collect more premium as the price is kind of near the money at the time of, it's still out of the money, but when I sold the put, it was pretty close to current price. So I don't mind getting assigned. So if this market comes down, basically I have to buy the shares at the strike price agreed upon, minus my premium. So the premium is kind of factored in there as well. But anyways, TLT I think has some potential upside. I wouldn't mind building a position. So if this market kind of rolls over, then I'll start buying it essentially and perhaps add a second position or write covered calls on it. Regardless of that, very, very exciting. Also, by the way, futures I think is coming to WeBull. So if you're interested in WeBull, check the link down below in the description if you'd like to sign up with them. If you use my referral link, you'll get a bunch of free shares and so will I. So you'll be supporting the channel if you choose to do so. You don't have to, but I would very much appreciate it. There's also other brokers down there. If you're somebody outside of the US or you are looking to trade FX within inside of the US, I have several brokers linked below to help you trade what you want to trade on the best possible brokers. And all the brokers that are down there, you can actually integrate directly into TradingView, which is a really cool perk. So there you go. Thank you guys very much for watching. Have a great rest of your day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.